The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Hang on a second. There we go. And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
That's it. No click. Guess we're going to have to wait for the additional sound effect next week. What else do we have happening out here today? Well, the market, the little market that could. I think I can. Up 6.5 points on the S&P cash. Volume is not all that exciting. It's been kind of slow all day. But you know what? Very end of the day, the last 3 or 4 days, we've seen a lot of buying in the last 30 minutes. S&P's up 6.5, as we said. The NASDAQ 13. And can we make a great deal out of that? I don't know. 6 points in the scheme of things in the last few years doesn't really move the needle. It's nice. To me, it's the way that some of the sectors are going is the bigger signal out here today. But again, what is actually happening? I think after the push down in the dollar, there was a psychological point in the dollar index at 100. We're back over that with some gusto, as they like to say. Other commodities of interest, we're back over $50 on oil. And gold had a little bounce out here earlier in the day at like 1242, I think. I'm just doing this from memory. But bounced. Now it's kind of getting back down to those lows. It's off about $9. Just doesn't seem like it's got its mojo going on right now. And, is this price point anything to jump up and down about? It's not. It's just it's acting weird. And it's not giving big signals. It's just acting weird. And I don't know what to say about it. I've been looking at it and into it a little closer. I still don't have any more answers. In fact, I got more questions on it than anything else. Of course, silver, just down a nickel. So what else can you say about that? Well, as always, we persevere, we persist. I got to need one more P thing. But I'll have to think about it. In the meantime, we always like to start the show off with a little bit of history.
That it's all just a little bit of history repeating.
On this day in 1999, Priceline.com goes public. In one of the hottest initial public offerings ever, priced at $16. The shares open up at $26.62. They closed the day at $69. And yours truly had some of those IPO shares. I think I got 60 or 70 shares. Everybody, they were doling them out. I kind of vaguely remember it. I also sold them at the end of the day at 26 and change. And that was it. First day return of 331%. Exactly a month later, the stock will hit $162. And I cried until a mere year and a half later after the IPO, it was trading less than $5. It was a heady time. It was the best of times. It was the worst of times. It was the .com times. And what can you say? 20 years of trading packed into 18, 24 months. I think maybe that's the best way to describe it. There's always things that pilots say, and that is pilots, especially professional pilots, hours and hours of boredom with few seconds of sheer terror. And that was no boredom and sheer terror all day long. As I like to say about commodity traders, they wake up wet and screaming. Yes, they sleep like babies. What else is going on out here today? My sleep cycles are all messed up. I'm having a devil of a time getting them back in the whack. But you know what? It allows me to go and look at some things at 4:30 in the morning that I wouldn't normally look at. But I did go back through all the IPOs of 2016, and you dig a little farther in there, and you find out that the proceeds, i.e. the amount of dollars that they raked in annually, fell to the lowest level since 2003. Pretty poor year. The 2016 IPO returns strongly rebounded to 23%, the best performance in 3 years, where they've almost been a perennial loser for the stocks that did go IPO. And you know what? It was one of the first years where technology IPOs actually led in the first year, unlike some of the things like Facebook that took a nosedive before they turned around as the IPO price got smacked. But you know, some of those stocks that hit the lows, a la Priceline, are the biggest buys years later. Problem we have right now is everything is priced for 10 years of growth. And when those IPOs come out the door, there's a very thin line between making a lot of cash and going broke. And I think probably we need some regulation to get in there to limit the amount of selling the sizzle instead of the steak. But, you know, 2017 off to a little bit of better year for IPOs. I went through all of them, added some of them to my database for scanning each day. And I don't know what else you can say about it, but not a good year when we look back at it. But I went through all of them that went public this morning to see if there was anything out there that would look like that, something that fell from the heavens back to earth, only to actually figure out how to run their company years later after they took a lot of investor cash. A couple of ones came to mind, and I may, if I've got enough time, might write about them tomorrow in the Tech Insider. But that's it. Again, a week that has been very, very sparse for news. Probably the most interesting thing for me today was watching the rollout for the Samsung Galaxy 8 series of phones. I have to say that if you wanted to say a company wanted to become Apple-like, Samsung has become incredibly Apple-like, and they've even one-upped them on a couple of things. Anyway, the new phones came out in Madrid, Spain. It was Madrid? I think it was Madrid, Spain. That's every year they have the big giant to-do there for all the cell providers and everybody in wireless. And they show off the new phones. So Samsung was showing their new phone out there. Don't see prices yet. I think the prices come out tomorrow when you can pre-order the phone. But I have to say that I saw an ad. You'll probably see it too. It's with an ostrich. He's got the Samsung phone with the VR attachment, the goggles on. And I have to say that if everybody used to say Apple used to have the best ads, I think this one was the best ads I've seen in maybe 4 or 5 years for Samsung.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
And, we were talking about Samsung. Anyway, the review so far, very good. But I just have to say that there was kind of a thing where Apple had its ads just about perfect for a number of years, even back to 1984, when they had the Super Bowl ad that was the gal throwing the thing through the screen, circa the book 1984, George Orwellian-like. They always had kind of it told a story, did something great in 30 seconds. This ostrich one, I think, lasts a minute, but it does everything perfectly. Don't know if the product's any good, the VR thing, but if normal with phones okay and the ads are good, you're probably going to do fairly well. What else do we have? Oh, anyway, another 52-week high in Apple. Another day, another $1. It's up here on light volume today. I'm not expecting anything more than maybe a little bit of sideways to higher action. The first stopping point, as I've said for the last few days, looked to me like it was going to be around that 2375 on the S&P cash. We got to 2370, so we're kind of close up here. Could we get another 5 points out of this market between now and Friday's close? You know, they are painting the tape for the quarterlies, and that goes through. But even with a little bit of lighter volume out here, I don't see a lot of stocks that suggest that or have given any signals that they are ready to turn down. They may any minute, or even, a month from now. I'm just saying that I haven't seen anything out here that says pull the trigger short, although, as I've said, volume's been light until the last 30 minutes of the day, in which it's caught up a great deal. Let's take a look at some of the energy stocks out here. As I said on Monday, I thought that this was going to be fairly interesting. You had the big move in ConocoPhillips today. Nice pop, huge volume. This thing looks like it's going right back up to $53.17. That's the December 13 high, but a big sign of strength. And like almost all these energies, they were going back into gaps, and those gaps, some of them, you had some nice days coming off of it. On ConocoPhillips, the 9th of November, you had some nice juice, almost 11 million shares. And you got back into it with about 6 million shares on the 27th. And now you've got kind of almost the automatic rally out of the shotgun. The other thing I like is that the October 18th to December 13th leg had a lot of energy. You came back, a nice, gentle pullback. The energy was significantly less from that December 13th high back down to the March 27th low. And again, stocks tell a story if you can watch them over time. And when you look, and what I try to do is combine my power law vector indicator number to give me kind of a heads up that I should be looking closer at energy, because sometimes, it is noisy. It looks noisy. Sometimes it's easy to tell that there's a significantly lighter volume, but sometimes if it's just lighter volume every single day, it doesn't look that much lighter until you look at it and add it all up. And sometimes it's kind of hidden or camouflaged. Sometimes you just get nothing all the way back down, and that's easy to see. But sometimes like this, it's, it's what? Energy was probably 20, 25% less on the way back down. And for a big stock like ConocoPhillips, it tells you kind of a lot. Other stocks of interest out here is EOG. This one popped up, like a lot of these energies, kind of popped very early in the day. They ran a lot of stops. They pulled back, and now with crude kind of holding that $50 level, we continue at $50.40 here. You continue to see that, but a nice pops is the energy in these things. Now, again, this one's a natural gas stock. Probably the best thing about this one is it's still in the $90 range, which means that you're going to go $100, and that's exactly what this one did today. March 30th hit $100 and 16 cents, and then kind of turned around. Just a lot of sellers, a lot of people not thinking that the mojo is back in energy, but there's just so many of these stocks in the energy sector that are showing this kind of mojo that I think it is. United States Steel, Hyman Roth said that they were bigger than U.S. Steel. U.S. Steel not feeling all the love, but man, I got to tell you, a nice pattern out here. $30.71 February 1st goes up to February 21st at $41.83. Volume's okay up there. It's not fantastic. And then you roll down for a little while. I would have liked this thing if it would have truly tested. It was just 2 cents over that February 1st low coming back here on March 27th. But the volume was significantly lower. You had 27.3 million shares to 20 million shares. So you were 7 million shares light. As you can see on my power law vector indicator number, the energy was off on about 35% on the way off that top compared to the way up. I like stocks that are congruent, i.e., if I'm smiling at you when I call you a horrible name and you're a friend of mine, I'm just kind of ribbing you. But if I've got a very serious face and say horrible things to you, you probably think I'm rather serious. But if I've got a smile and a laugh in my voice, you get it from the context. Maybe that's a better word, the context of what's going on. And this is the patterns I like. This is why I was kind of hot on energy the last few days. That was just that everything I saw out here showed good strength up, light energy out, and test of previous lows on lighter volume. So that's it. I'll get off my high horse and get on to some other lower horses for the rest of the show. We'll look at some stuff. Well, that was the gaps up. Let's take a look at the gaps down here. Out here, AU gapping down. Not huge. Not a lot of volume. Again, like I said, not a lot of damage in gold. Just not a lot of clues about what it's doing. So we'll look at it. Anyway, you had some nice energy up on this one on the 15th of March. You had 5.2 million shares. Back into it today with 2 million shares. So you're starting to get at least a few clues out there on that today. Give me a call at 877-927-6648 and email me at path@tfnn.com. And, of course, you can post questions in the den on a rather, it seems very quiet out here. I'm not exactly sure why. I guess probably because we've been such at a tight trading range for the last couple of hours. Up 8 points. As I said, volume's kind of light. But again, I don't suspect anything else. We're probably going to just hang out here with light volume for the next couple of days as fund buying gets started and they tape for the end of the quarter. UAA, which is Under Armour, was wondering how this thing would get affected by our friend Lululemon. And we'll talk about Under Armour and Lululemon and some of these other retail clothiers when we return in another action-packed adventure-filled cartridge.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we'll look at some more of the percentage movers out here. Freeport McMoran up today, got some juice in this thing. Pretty nice move out here. Nice volume, at least compared to the last 2 days. We'll see what the volume comes in. And I have to say, at 2:30 today, the problem has not been that the volume's been horrible. It's just the volume's been horrible most of the day until the close. And I don't know if you can say anything other than that. I've gotten some data recently that I've had access to before. Actually, I've been working on it the last couple of days. My trading's gone on, and I've been sitting on my hands with long positions and knowing that I'm not going to do anything before probably mid next week on them. They're going my way. So best to just let your winners run and not think too much about what's going on. But what do you do out here on these? I think you might get yet another chance on a few of these. Now, this, of course, is copper and gold. So gold not doing too well, but certainly Freeport doing well. And again, kind of the industrial part of this business seems to be getting the love today. Sometimes it's gold, sometimes it's copper. But one of the bigger moves today, watch the volume as we come in late in the day. Pump, one of the recent IPOs out here, having a good day and actually up a little higher. I think this is, if I'm not mistaken, let me check it out here. Where is it at here? Because I think I just worked on this one this morning. PUMP. Midland, Texas-based oil field services company providing hydraulic fracking and other complementary services to leading upstream oil and gas companies. So came out yesterday. Has had 2 decent days, a little less volume out here. But, that is the first one and a big percentage mover. TCB, which is TCB Financial. Again, some of these things sold off. Some of them are just bouncing because everybody and their dog was short these things. I don't know if you can say a lot about the movement in this when you don't like the fact this thing had huge volume just a few days ago and didn't go anywhere. But I don't know if there's that much. Not that clean of a pattern. Omros Corporation, OMER, back up to its pretty much its 52-week high, the April 6th high, $16.38. This thing spiked it a couple of days ago, spiked into it again today with some volume. So that may be a good intraday trader. That thing looks like it has some wide price swings. BKU, what's the one on this one? Bank United, another financial stock. I guess we need to look at Goldman Sachs, and it was kind of the ugliest one. We were talking about it, I think, on Monday, so we'll catch up on that one. Not a lot of volume in these financials, but again, the last few days, all the volume's been packed into the tail end of the day, so you almost have to wait till the end to actually make a decision. But a nice move. You had, some big down days. In this one, the 21st of March, came down with 2 million shares. You're up today with 600,000 shares. So, you're going to need a lot of volume to break some of these back the other way. Let's check out the Goldman Sachs and see if anything's happening on that one. Pump you up, hands and friends. That's certainly true. Goldman Sachs, we were saying this one actually had broken through the previous low with some volume. Again, the tone and timber of Goldman Sachs was kind of the weakest of the financials. That February 2nd low to the March 1st high didn't have a lot of energy, but even worse, the energy off this March 1st high down to the low of March 27th had about 15, 20%. I'm going to say 15% more energy on the way back down. You also had some big days. You've got that high volume low in Goldman Sachs also. So to me, this rally is probably a little bit more out here about sector rotation, a little less about the same old people that everybody have been going to back for months, weeks, or year. gears. What else did we have out here? Let's take a look at some of the other stocks of interest. IBM, kind of interestingly enough, a lot of articles out about blockchain, the technology behind the Bitcoin stuff. But it was IBM setting this up for trading in energy and crude. And a very interesting technology. Supposedly it's supposed to save a bunch of money. I'm not exactly sure how it does. Maybe getting rid of accountants. Anyway, supposedly it's supposed to make a lot. Anyway, they put this stuff together, and it looks like the first real product that's going to go out and be tested in the real world with big money behind it. Of course, you screw up in trading that kind of stuff, and you could lose money in a hurry. Just a doji out here, nothing really showing. You got to 172 the other day. Really nothing showing that this thing isn't going to go at least retest 172 again. So, overall, so far, you had a huge move up. That was the October 18th low to this 182.79 February 16th high. You did that with some very decent energy. Are you going to be surprised that you get kind of a retracement out here? I don't suspect that you would. There's a nice shelf at about 165. There's some confluence that comes in right around 166. My guess is that this thing over time will find its way around to that 166, 167 area, and that's probably where I would want to take a look at it. The downside is every time it comes back, Warren Buffett is probably buying more and more of it. What else can you say? Hey, let's take a look at some other ones out here. Let's see if any of these FANG stocks are doing anything today. I haven't really seen anything. Another day, another high. This one, of course, just a couple pennies higher. Very light volume on it so far. To Facebook, Amazon, Jeff Bezos, the richest man alive. The second richest, right? Yeah, second richest guy. See that he bypassed Warren Buffett and another guy that I hadn't heard of before. Nice little doji out here today on no volume. Again, I keep on looking at these stocks and see a lot of people talking about antitrust. I don't think it's gotten to any kind of critical level yet, but it's always going to be hanging over the head that one day the Justice Department does come out and say something about Amazon. A pretty good case I saw made on Google that if you're an online video content creator, that where would you go if Google closed tomorrow? Are they not using their position with YouTube to actually hurt competition? Microsoft got their hand in the cookie jar in 2000 with a whole lot less than what these companies are doing out there, and that's probably what bothers me the most. We'll look at Google when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I don't know if this war is over in Herbalife, but pretty ugly chart out here. And I'll have to do some more research on this. Of course, the titans of Wall Street have been fighting over this one for the last, year and a half. Just seems like the Vietnam War just never, ever finished. This thing gapped down with some huge energy on the 24th of February. That's 3.7 million shares. Came down on some fairly decent energy, got down to $50.70. It's gone all the way back up to $58.75, up to that gap. The last couple of days, 617,000, 400,000. Again, that's against a 3.7 million share gap down. You got a handful of people out here looking to get their cash back. It's hard for me to figure out what and why Herbalife would get bigger. But pretty ugly looking chart. And there's probably not another company really like it, maybe Avon. So there's not a lot to compare it against. But, if I was thinking of pulling the trigger short, which I am not at the moment, there are some stocks out here that would attract me very much if these markets turned ugly and had a Pepto-Bismol moment. Which I don't see. I think in the next few days, what we're going to see is everybody suspect that tomorrow is going to be some kind of high that should be shorted, and then they'll squeeze those folks Monday and Tuesday, and then if we don't have any volume, the market rolls over next Wednesday or something. But at the moment, I think everybody's probably going to get a day or two ahead of this market, and probably not the best thing to do, even though I see light volume throughout the day. Whole Foods market. This thing has, of course, been actually pounded and back down to $28. I think maybe last year's season of South Park, after 20 years, may have been their best. This year's wasn't all that exciting. It had its moments. It wasn't. In fact, even the creators thought that it's too hard to do a continual parody that they did in the last season. But the year before, it was all about a Whole Foods moving to their town, and suddenly everything is wonderful and beautiful, and took a lot of swipes at Whole Foods, which I enjoyed mostly because of at least a percentage of their customers being a little pretentious, and I probably is very, very generous saying a small percentage of them. But you got a chart out here. You got a lot of stuff that I like, which is you tested a previous low on lighter volume. You had $28.62, the February 8th low at 8.5 million shares. You test it with less than half, 3.77 million shares. The energy off the top, a little less. I probably would have liked to seen a little less energy back down to this March 14th low, but you get a good low. You get a nice little bounce. You pull back one more time, and here's where you had decent energy off the low. And when you came back, what did you have? You had a lot less energy back down to this low of March 28th, and the volume shrank once again. This one's knocking at your door. Hello? Hello? McFly, there's no volume here. McFly. Anyway, light volume, everything you wanted to see down here. Little volume pickup yesterday, and a little pop up today. I don't know if this one is totally ripe yet. If you got into it yesterday at the open or the day before on the close back above 28.62, which would have been your buy point, I think it's not a bad looking chart out here. Your risk reward would be defined with a close below 28.38. I don't know if there's that much money in it, which is one of the other reasons I didn't touch it. But if you're looking for good examples of price and volume and standard Wyckoff style buy patterns out here, looks good. And again, I think that there's a lot more going on in the market in sector rotation than a top right now. But we'll see. It's probably going to take a few more days for us to give that signal, get that signal on whether or not we are going to have some kind of significant top in this market. But again, I would like a short position in the coming week a lot more than I did maybe last week. Last week was kind of the push down, and a lot of times, most of the time, in fact, you get a nice warning before the market rolls over, and it's just that you aren't listening that gives you that. Anyway, 2368 on the S&P cash. What else are we looking at here? We talked about Celestica. Celestica giving us a fairly good signal, and this one's unambiguous. Even a blind man could see this. January 27th of this year, $14.54, 2.66 million shares. So what do we have? We have less than 500,000 shares yesterday. It goes above it, closes below it. This one probably needs to be a buy back around $13, which is about halfway through this gap up. Do you get it? I don't know, but risk reward would have you at about $13. You had a sign of strength come up here. You're going to come all the way. And in fact, you even pulled back with light volume on February 28th. Just to that gap. So kind of a nice deal, not a lot of money. You moved $1 in all this time, but my guess is you're going to get a shot at it at $13. So keep an eye on it. ACAD, ACAD. What else do we have? Little volume picking up out here. This thing's done basically a 50% retrace of this move up. I was looking to see whether we'd have at least some of these biotechs give some kind of signal. In fact, why don't we bring up the IBB real quick? Couple of nice days out here for the IBB. Again, not a lot of volume up or down, so I'm not going to jump up and down. You had a big down day on the 21st. Of course, with the rest of the market, volume came in at 2.1 million shares, and it's just been light in the sideways motion out here. Again, I suspect that you're probably going to have some kind of short squeeze. I think this thing can make it back up to $300. And if the volume remains light, then maybe you could take a stab at it yet again. What else do we have? We got a little bit of time. Let's go ahead and look at some of these ones out here over the last week or so that we talked about. American Eagle Outfitters. Talked about how some of these retail stocks weren't looking that bad, and we brought up American Eagle Outfitters. Wasn't thinking that I'd jump on board, but did say these things may be at least at the lows. Maybe they need a lot of consolidation or a change in business. But for the moment, I'm not buying it, but I wouldn't be holding it. If I wanted to be short, I would have covered it. You had kind of a nice pattern. You got down here to the March 1st low of this year, 1385, 20 million shares. You went through it with 4 million shares on the 21st, and maybe 5 million shares the next day. So you're down there with about 25% of the volume. You know you're going to pop back into this trading range. Some of these don't look all that bad. We'll look at a few more before the end of the day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And pretty good pattern out here for shorting in Lulu. This thing gapped down with a lot of energy. This started back on the 2nd of September last year, 17.7 million shares. That formed the gap that you came back up to with 16 million shares on a gap up on December 8th. We're never able to really get through it. Then this thing just kept selling off and selling off and selling off. You actually had a little rally into the earnings. And, of course, today it gets the losing horn. Down on you. huge volume down below the previous low of 3.37 million shares, 42 million shares so far today. That opens up these lows when we go back to November 17th and December 10th. So I don't know if you can make a great deal over those either, but a lot of these didn't look all that bad. This one was not one of the ones that looked good, though, in this. We'll look at a few other stocks out here. Victoria's Secrets, L Brands, was wondering if some of these have just washed out so much, or if they're going to face the face of Lulu when they come to earnings day. But I tell you what, the chart doesn't show a whole lot. This one may be on a buy with a close back above its February 23rd low at $47.93. Don't think you're going to get that today. And what's the 47.93? You might. I don't think so. But gap down with huge energy, which is 27.8 million shares on the 23rd of February. This thing went up. It's pulled back on light volume. It's gone under the previous low with the best day it had. A volume is 4.2 million shares against that 27 million share low. And now it's gone sideways with kind of light volume. Again, any of these things that have gone and been cut in half, like L Brands at $95, now trading at less than half that, are going to need consolidation. But this is the first thing, is to start watching some of these things when they get set up and start setting up. But you kind of have to wait on that. Okay. Let's see out here. There's one other thing. We were talking about PBR and all these energy stocks looking rather interesting. In the case of this one, we brought up just, you had a 48 million share low back on November 14th in Petrobras. This went below it with 31 million shares. So, pretty significant. Volume's off about 45%. What is that, 40? Not quite 40. What is that? Let's call it 38%. Anyway, huge volume reduction as it goes below that $9.14 low on November 14th. Breaks it. The volume kind of picked up on a few days. You had a 35 million share day, but still way below that 914 of November 14th. Now it's back into the trading range. Again, I suspect you're going to need a little consolidation on some of these. You may even get an opportunity, if these things pull back, to pull the trigger again. But if it does pull back, I'd like to see something like 20 million shares. Don't like Brazil as a home for any stocks that I would buy. That's probably the worst part, and this one may be the weakest of the energy stocks. So you might take a look at it. If this one can't fail or doesn't fail out here, even with all the internal turmoil of Brazil, may be a good signal for the rest of the energy stocks. In the meantime, sell when you can, not when you have to, and we will see you here. Same bat time, same bat channel. Come on.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.